Crude prices tumbled on Tuesday over concerns of slowing global growth, but better today. The commodity is now tumbled over 20% in the past 3 months. For more, let's welcome Michael Wirth, Chevron Chairman and CEO. Thanks for joining us in Davos this morning. What, if you could wish and it would come true, what's the perfect level for, and we'll talk, I guess, WTI, since that's what we've been talking about. Where would you like it to be? What's the best price?
You know, the real thing we'd like to see is stability. And commodity markets, when they're volatile, they make it hard for investors to invest. It's hard on consumers. And so you really need a price that encourages investment and draws in enough new investment, but is not so high that it weighs on the economy. We're probably not far from that kind of a price right now.
Are we good enough at getting it out of the ground where this is it's a profitable venture for almost everyone at 53, or not quite?
Yeah, I think, you know, Brent in the 60s, WTI in the 50s is an area where the industry now can be profitable. That may not have been true a few years ago, but as we've gone through this last down cycle, people become more efficient. We're finding new ways to use technology, and we can make it work in that kind of a range.
We had some discussions yesterday about what technology advances in exploration and development, what that means. To me, it means finding more oil, finding more hydrocarbons. To other people, on the far extreme, people want to leave it in the ground and, I don't know, have solar and wind power everything, which is obviously not feasible at this point economically or for anything else. But how do you view technology? Cleaner, easier to get it out of the ground, less ancillary pollution, or just low carbon footprints?
Well, you know, one of our former CEOs used to say we're a technology company that actually just happens to produce oil and gas. So it's a very technology intensive industry and always has been. You look at some of the things that we have available today as big data and some of the tools that enables has really come to fore. And we're beginning to apply those things to operate more safely, to protect the environment, to be more efficient and take costs out of the system, and to be more productive. A big part of the story in the Permian Basin has been moving from the early days of almost brute force trial and error by the early frackers to beginning now to really bring technology to bear to become more efficient, to get more productivity out of the drilling. And so it's a tremendous story about technology in all its dimensions.
What about just exploration itself? It's not the crapshoot it used to be, right?
No, subsalt. You hear a lot of talk, Brazil, topic here in Davos this week. Looking through the salt to try to image the reservoirs beneath that is like looking through a fogged up glass pane. The technologies we have now enable us to see through that much better. We can process massive quantities of seismic data much more rapidly and with much more precision than we could before. So all of these things are part of taking risk out of the business, improving efficiency and productivity. And I mentioned earlier, the industry can operate in this kind of price level now. Big part of that is because technology has made it more profitable.
I was curious, and I'm sure you saw it just a couple of weeks ago, Alan Greenspan, Ben Bernanke, Janet Yellen, and a number of others actually came out in favor of a carbon tax. I don't know if you saw that, with the idea of giving the money back to taxpayers. I know Joe's shaking his head.
You read I sent you the Holman Jenkins piece.
But
right, Andrew? Did you get it and read it? You love Holman.
I saw it and I read it. And what I love about Holman is he always makes you think. You don't always have to agree with him, but I wanted to get your take on that assessment. Well,
you know, many people believe that a price on carbon is the way to try to attack the climate issue. The devil's in the details on these things. And so we're in favor of market-based mechanisms as opposed to mandates or subsidies or command and control approaches. But something like a carbon tax, you get into a massive source of revenue. Will governments really just rebate that back or not? And the other thing that in many of these proposals has been a feature is a stated intent to clean out all the existing less efficient regulation that has grown up.
Which was part of their idea. Part of their idea was effectively remove the regulation, try to create some kind of market-based system on top of it, right?
You know what the yellow vests came from, right? You heard of the yellow vest?
I have.
You've seen Paris. Okay. That was
higher energy prices, higher gas prices.
From the carbon tax, purely from the carbon. Let me ask you something else. You saw Norway. And actually here we're hearing the cars, there are some people that think in 3 years we're going to be able to make the transition to electric cars. I don't know what you think the the eventual time that it takes where we're up to 50% electric. I don't even know what that is. But in Norway, the leftist government decided that they're going to produce no more hydrocarbons. Unfortunately, they're one of the biggest providers of energy to people that get really cold up where, neighbors around Norway, and I don't think that's going to work either, is it? I mean, the way these things collide, what you'd like to do and the realities of the world, a lot of times it's not possible. When do you see something like all electric fleets?
Well, electric vehicles have made great inroads from a very small base.
It's still small, though, isn't it? What is it? Is it 0.5%?
Yeah, there are, I think, 3 million electric vehicles in a world of over 1 billion vehicles today.
How many?
1 billion.
And how many total electric?
3
3
million.
3 million.
So and the vehicle fleet takes time to turn over. So even as you see increasing rates of
Grin
penetration,
like that.
No, I'm looking at you.
Unbelievable.
I know what you think it's going to be next year. Do you hear
I
that?
don't think it's going to be. I
Did
think
you hear
we're
that number?
decades away. Decades away.
Okay.
I think we're.
So Mike should still do what he's doing? I mean, he's got your okay.
Look, he's investing incredibly in all sorts of new
Okay.
technologies away
How long
from
will hydrocarbons
petrochemicals.
be part of the energy?
for decades to come. And,
5 decades? 10? Will my
And
children?
any forecast you look at says for many decades to come,
You like flying on
hydrocarbons
jets, right, Andrew?
will be an important part of the mix. And so that gets to an interesting point, Joe. People look at electric vehicles, and if you live in California, where I do, you would think it's all going to happen tomorrow. Only about a quarter of a barrel of oil ends up in passenger vehicles. 3/4 ends up in airplanes, in ships, in petrochemicals, and demand for all of these things is growing. Not long ago I was in a meeting with Dennis Muhlenberg from Boeing, who really cited some interesting statistics. He said 82% of the people on the planet have never been on an airplane.
Right.
And their models tell them that over the next 20 years,
It's only going to grow.
100 million people will get on an airplane for the first time each year.
And people
for
like to
20
be warm.
years.
A lot of people aren't warm.
And so the demand for a better life, which the emerging economies are seeking, requires
Like
energy.
we actually had someone yesterday saying that we're going to try very hard and it won't be long before we decarbonize the planet. And suddenly I disappeared because we'll all disappear if we're made of carbon, unfortunately. It can be tough to do, isn't it, to decarbonize the planet?
I know you're a biology major, so I can ask you those questions. We could talk about some other things besides.
Well, Michael, let me just ask you, we are talking so much about the slowdown of the economy.
Sure.
Do you worry about that from the perspective of somebody whose fortunes rise and fall with demand pictures?
We do, because oil markets are driven by the difference between two very large numbers, demand for oil and supply for oil. And so at the margin, small changes can take the market into or out of balance. What we see around the world, and we sell our products into a number of sectors that historically have been pretty good indicators of economic activity. So construction, mining, transport. We sell lubricants and lubricant additives into industrial applications. We're not seeing signs that we're hitting any kind of a wall. Things may have slowed down a little bit in certain parts of the world, but
one more thing,
Sure.
and we got to go. What do you think in our lifetime we hit peak oil, or do you think it's? I mean, I just saw another 1 billion barrels equivalent found somewhere else. We supposedly hit it in 2012. I remember that. I know there were forecasts back then. Do you think we ever hit peak oil?
in terms of peak demand, I think yes.
No. In terms of where
As
we
much
start,
as we
the
can
supplies that are left or
Oh.
start going down. We keep. it's
No,
hard-
we'll transition to other things before we
Before that
hit
happens.
peak
So
oil. Because as you reach that point, the price signal will arrive, and other technologies that may not be as competitive and economic today, I think will be. So we'll never run out of oil. No.
All right, good. Thanks, Michael Wirth,
Hey, thank you.
to see
Great
you.
to see you.
Thank you.
Chevron chairman and CEO.